I hope everyone is doing well. Just wanted to give a quick market recap. I'm going to make this very quick because I know most people don't review videos for a long period of time. So MarketSmith main screen, again, a lot of distribution days, which means market is under pressure and there is a lot of liquidation going on. Going through the indexes very quick. So as you can see, spiders, it is S&P 500, the one that tracks, is very close. It's still about 200-day moving average. And let me see here. Okay, so this is the spider ETF that tracks S&P 500. So as you can see, as I discussed in my last video, that I would expect this to continue to pull back to 200-day moving average, which is this red line. So it doesn't have to go straight down. It can go slightly up, and then it can go down, touch this, and then from there it can build a base and then hopefully consolidate in this area in coming weeks after the election maybe, and then hopefully break out to the top, break out or break down. We don't know that yet. So it can do that, or it can go sideways here and it can form a base like this, and all indexes can do that, and then it can consolidate right here and then break out from there. When you look at the monthly chart on this though, as you can see, every time it touches this top line, which is the resistance line, it does correct at least to this orange line, which in this case is the 12-month moving average, and it will actually took the line off here. Give me 1 second here. So that goes right there, and I'm going to turn this to red, and that is the stop. Okay, or for the buy point for us if you're going to 401k, back into 401k like I would. So that's where it should find support. It may not. It may continue to go down. However, historically, that's what it has done. Going to Qs, as you can see, Qs are further extended to 200-day moving average. So again, same thing. It can go up and down, and slowly it can trickle down to 200-day moving average, or it can go in one big dump. If it goes in one big dump, that may create a capitulation, and it may really set up for a bounce or a V-shaped bottom. We don't really know what is going to happen. Or it can make a base like this. It can make a cup like this, and then somewhere after the election it can probably consolidate and then break out or break down. This is interesting here. When you look at the monthly chart, this has been the trend. This has been the resistance for years. You can see the top purple line and the bottom. It has broken through this. It normally doesn't happen, as you can see, right? In any case, it should also come back to this orange line at a minimum when you look at historical precedents. So let's see here. Okay, so those are my thoughts. Nothing has changed. I still expect the market to continue to trickle down to the 200-day moving average, or form a higher low or a U-shaped base, and time will tell what happens. In any way, it will mark time at a minimum, in my opinion, from what I have seen looking at several charts. So that's spiders, Qs. Let's look at IWMs. Now this is very close to 200-day moving average, so this can actually break through and go down. Again, we'll see what it does. The key point here is that you should be on the sidelines, like I am in one of my 401k account, 100% cash. I was lucky enough to time the market exactly this time. So again, I will stay out until it gives me a reason to get back in. So we'll see what happens. So again, I'm not going to go through all indexes, but that is just a very quick take, and nothing has changed from my last video. Again, the best place to be is on the sidelines, in my opinion, at least for the long-term accounts. Now, I have some stocks I will be buying, and I will probably make shorter videos, individually on that. That's all I have. Have a good night. Take care.